What's up, everybody? Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. I hope everybody had a great last couple of days. Wednesday was our live DMC, and then yesterday was our live trade room, so we didn't do a Daily Market Commentary. So we are rolling for today. If you're new to the channel, do me a favor. Down below, there's that notification bell. There's a subscribe button. Hit that subscribe button. Become a subscriber. If you're a regular viewer, here's what I'd ask you to do. Share the channel. Go on your YouTube page or your LinkedIn page and share the channel and ask others to start following. It would mean a ton if you would do that. I think that would be awesome. So, all right, let's go ahead and dive in as we are ready to roll. So, yesterday was a day where we saw the S&P really come down pretty hard. Now, I will say that in our live trade room, we had looked at a little tiny 15-minute level in here. And said, if we can get a reversal at this 15-minute level, then we're going to have a good opportunity. And the market just hit it, and it cut through it like a knife through butter. But then we chopped sideways at that area. So that should give everybody a clean indication that a bigger fall was coming. And that's what we saw later in the afternoon, was a much stronger fall from that area. And so I did, however, we did still have a big picture uptrend at that time. Our 4-hour trend definitely was still a big picture upward trend. And so our hourly level down here did give us a bit of an entry later in the day, and we got a pretty nice move away. So for those of you that took that one, you actually were rewarded with a pretty nice little move away on the hourly zone. The second time we came into that level, we traded to the bottom of it and then actually all the way through it, and now we've popped up again. So I think that our better chance now is for price to continue to move south. So you did get a little bit of a positive move off of that. It's certainly bigger than the little 15-minute stop up here that existed in that zone. So now what am I looking for today? Well, I've got to look for potential reversal areas. Well, when I go to my 4-hour chart, you can see that we actually had a breakdown line here a while ago that we just never came back and retouched. And if this breakdown line has basing in front of it, it now sets up for a really nice move. That's kind of far away from where price is at the moment, and we actually have a very nice candle-to-candle entrance right now as price is moving away from this level. So hopefully I can get this video out soon enough that you can still take an entry on this from a candle-to-candle standpoint. If we do rally up a bit, I really like this wick over wick area that we have up here as a potential reversal if we rally up a bit. But keep an eye on this area down here for some basing before then this move into this region here. Looking at the Nasdaq now, the Nasdaq, we had a breakdown set up in the Nasdaq, and this breakdown did give us some basing and then a very nice move away. I spoke to a number of people that caught that Nasdaq short, so hopefully you were able to catch that for a nice little run and catch some green on the way down. But then what it did was on our 60-minute chart on the way down. Now, I did have a little 15-minute level set up in here that the market was this little wick over wick area right here. Sorry, we had this little level set up, and the market gave it a touch, popped up, and popped through it. Now, that then gave us this little hourly wick over wick area here for a potential entry. Well, when I zoom back into the 15-minute, that's the level I'm looking at as a really nice, strong entry if we get a return back to that level. Now, I'm not sure that we will because we've come to our second breakout area in the Nasdaq, and we are sitting just above the area that we thought was going to be a decent little breakout. Now, if you took that breakout in the overnight, at 6 candles, we've basically, 1, 2, 3, 4, 5. At 6 candles, we've basically gone nowhere. So you can take your stop and move it to break even. You're still in this short. There's no reason not to still be in this short, as your setup is still valid. You certainly wouldn't have been stopped out as of yet, and your stop should be moved to break even, with a target here at 10,350. Now, when I go to my 4-hour chart, what's my big picture telling me? Well, my big picture, I don't technically have a new swing. I've got a lower swing high, and we got lower than this swing low. So technically, if you're utilizing swing high, swing low, and then we got lower than this swing low, you have a downtrend. If you don't want to include this, because I know a lot of people wouldn't include this in a Globex sense, then our downtrend isn't official, but we definitely have a double top that is formed in the 4-hour chart. And, to get below the middle of that double top would be below this area here. So this is actually a pretty strong, I'll call it a pretty strong inflection point for our markets, because it was resistance here, acted as support, and we're coming back down to it again. So a couple of ways that this can be played. If you are looking to take the very short-term trades, then your entrances you're going to be looking for are going to be small time frame shorts to allow you to get into a good solid trade position, and that's why you'd still be in that breakdown. You've got some reversals up in here. If you've got a longer term bias and you're saying, well, yeah, but the market does come down every little bit like this, and then we've bounced back up from it. On our daily chart, we have yet to put in a lower swing low or a lower swing high at all. We have come to a potential lower swing low if we get below this area, and the same swing high. So this is the first time we don't look at daily charts very often, but let me throw this daily chart on here. And I'm going to throw my MACD, because my momentum indicator. And what we're seeing on our momentum indicator is this. We're seeing the same highs in price, but lower highs in my MACD. So we're definitely seeing a waning of momentum in this market. And so for the first time in a while, we may see that there's a bit of a tail off. And we may get a little bit of a longer term pullback. And if we do get that little bit of a longer term pullback, we have lots of areas down here that are decent areas of demand, but our closest one isn't until 10,000, right at the 10,000 mark in the Nasdaq. That's our best one. So that's 400 points that we could see the Nasdaq continue to fall before we hit our demand area. Okay, now we have fallen just a bit below the 20-day moving average. For those of you that utilize moving averages on a daily time period, fallen just below the 20-day moving average. And typically that area, when I see a demand area between the 20 and the 50, that's usually a pretty strong bullish area. So I'm going to keep an eye out somewhere down in here for a speculative long, because I think, for those of you that are swing traders or position traders, pullbacks like this give you a chance to get in with minimal risk if you're wrong, because you take a small stop out, but you can run it for the next leg higher if indeed that does transpire. Now, it may not, but I want to see if we do get a pullback into this region here for an opportunity to get long on a pullback. And then if that level fails, then by definition we would be in a downtrend, and then I can start to look for shorts. Right? So I know normally we focus on the hourly charts and the 15 minutes because we're looking for day trading opportunities, but as far as swing trading opportunities go, let's look somewhere down in here at where our daily reversal area just might be. All right, so let's move over to the Russell. So in the Russell, this frustrates the heck out of me because I had a really nice short setup, and it was a confirmation entry. It had to be a confirmation entry because we were in a big picture upward trend. That's the level that we had identified from a while ago. And price gave it a touch and a very strong move away. Unfortunately, we didn't trade halfway into the zone in order to activate that trade. So that level, unfortunately, did not give me an entry because we didn't have all the way up. That's okay. More often than not, confirmation entries save me from bad trades than they keep me out of good ones. This was a time that it kept me out of a good one. But it was a very nice move away. Some of you were able to catch that one. You took the limit entry anyway. And so now we're back on that same thing that we have in the S&P. That candle-to-candle entry is actually set up really well. If you take that candle-to-candle position, look down here for a potential profit target somewhere in this 1465 range where we have this area of support. All right, let's move over to commodity markets. So the crude oil, we had our breakout in crude oil earlier in the week on the 4-hour chart, and it hasn't come down below our stop loss point, but it hasn't really gone anywhere. And so when we look at something like that, and we took the breakout on the 4-hour chart, when we look at something like that, we got a breakout move away, but then it's definitely been more than 6 candles. It's just not really going anywhere. So if you want to stay in that position, you can certainly still stay in. We are seeing some weakness in that this area of demand has been tested now twice. The first move away, the second move away, the third. You notice we're trading a bit deeper into this region each time. I think that there's a chance that we're going to see oil come down as well over the next little bit. And so where are the levels that I would look for in here for potential reversals? Well, we've got a nice rally up here at the 4 a.m. Turn right here. Prices are coming down. My next area of demand, we don't really have a super clean quality demand area on here for price to completely stop. Even when you go to the 15-minute chart, you don't have anything very clean. You got this level right here, but that was kind of what was the catalyst for this short-term move up. So I would say that you want to look for a breakdown opportunity if we get some sort of a quality breakdown. Now, we could get a rally back up to this little region right here for a short here in the next few minutes, so keep an eye on that one. But I think it would be best to wait for a quality bit of basing and a breakdown, possibly somewhere in this 40.8 area. Gold is continuing its march higher. We talked earlier about a potential for a short time frame iron condor, and the market laughed us right out of that zone as it came up to this area, pulled back a little bit, gave you an opportunity to get out of the position. But today is the end of the week on that position, and we completely blew right through that one. And so that's because we've seen the gold market just rally straight up. So we're still looking for pullback areas for demand as an opportunity to get long, or breakout areas as an opportunity to get long, because longs are pretty much all we're looking for inside of these gold markets. So look for a basing area right at here for a breakout zone somewhere up there. If we do get a pullback, this is still our better demand zone. There's a couple of smaller time period ones in here as well, though, that are worth considering. Potentially this area right here, I think might be an okay supply area. Make sure there's no basing that happens in front of that level, or excuse me, demand area. Make sure there's no basing that happens in front of that level to allow us to enter that position. Moving on, our commodity levels. Other than that, not a whole lot to discuss from the commodity level standpoint. We had a nat gas area here that had a pretty decent setup, and then the market yesterday on an announcement just popped right through it. Remember, announcements are oftentimes going to cut right through those levels like a knife through butter, which is why we don't take breakouts over announcements. I can't state that enough. Copper, we are looking at copper's, coming down. We didn't really get any basing before our breakdown level, but we got a little bit of a retest and a retrace level. So I think that the next thing here is prices are going to continue to come down. So with that, we had that breakdown area, and that's what retraced back up. It wasn't a false breakout because we retraced back up, and now I would look at here at a bit of a retracement if we get an entrance right into that piece. Looking at bonds and currencies as we start to wrap up the week, the ZN did actually give us a little bit of a pop above this zone. Now, this is an area that we've been kind of calling this a sideways market on here, and we have a nice 4-hour upward trend that's definitely showing some tightening up in this piece, but no retests back to quality areas of demand. And so we just haven't really been trading this market because we hadn't had a reason to do so. We did finally break above that 139 area. So you would believe that the better probabilities for price to continue to head higher, although we're seeing a bit of slowing momentum heading into this area here. I'm still not convinced that we've got many fundamentals to support going higher on this one. And so it's been a slow crawl up. It's really you're slogging through the mud, if you will, when you're trading this thing, because there's just a lot of this sideways price action. Even on a 15-minute chart, it's really hard to get anywhere. So I'm not analyzing this until we are definitively outside of this range, which we are at the very, very top end of this range. I wouldn't be surprised to see us pull back to the bottom part of this range either. In the Aussie, a little bit of a pullback in the Aussie, just a bit outside of our supply area we had up here, but that was a confirmation supply anyway, coming down to what could be a decent area of demand on the hourly chart. This area here exists because it was a resistance point back here. Old resistance oftentimes acts as new support. It was a little bit of a wick over wick area before a strong rally up in price. And that wick over wick area before that strong rally up in price was formed right around the London Open, which is a pretty good time of day. So I'm going to keep that area intact for today. If I look at the 4-hour on this thing. My big picture trend is still up. We have not changed our trend direction. This is right now still a pullback. So let's keep an eye on that area for today. In the euro, we had a euro area of demand. This little drop base strong rally up. Price came fairly close to it, but certainly not into it. So I'm going to put this potential breakout area right in here. If we get a breakout to the upside, remember we will need our quality basing, but this level down here of demand does still exist. Canadian dollar. So our Canadian dollar, we did actually get a nice move off of our 15-minute level in the Canadian dollar. We got a secondary touch of that level and got a little move away. So the Canadian dollar trade worked out extremely well. Hopefully we're able to catch that for a nice run as it popped all the way up. On the 4-hour chart of our Canadian dollar, what I'm looking at now is that our best demand area doesn't come into play until here, but we are still in that bigger picture upward trend. Slowing of momentum a little bit up here. And so if you wanted to try I'll call it a speculative short, your best chance would probably be a breakdown below this line right here. On some kind of a speculative short play. Great British Pound. Great British Pound, we had another demand area that almost got touched, so we switched to a confirmation entry. I'm going to put that same breakout area, potential breakout area up here in case it does come to fruition. Just like we have in the euro, because our big picture bullish trend still exists. But we are seeing that, like I said, that same thing showing us that weakness. But we are getting rising lows and the same high. That's typically a decent breakout scenario. And then the Japanese yen. So the Japanese yen, we did come into our supply level, which was up above us. Our 4-hour trend was very sideways. So if you wanted to take that 4-hour supply, the 1-hour supply, you hit the level 1, 2, 3, 4, 5, 6 candles later, price was still inside the zone, telling us probably want to close this position out, even though it hasn't hit the stop loss yet. And so price did wind up popping through there, and now that would tell me that the origin of that move, which is this speed candle down here, becomes a pretty good, decent shot for an entry, and that's right at the Japanese market opens. So that's what we have for this week. If you guys have any questions, as always, shoot us an email, support@tradersarmy.com. Thank you so much for joining us today and every day. Until next time, everybody, I'll talk to you soon. See ya.